which many companies have not used this provision. So this is very important provision where the exemptions can be sought by the government, and the government is giving those exemptions. There is the power of central government to modify application of the provision of the law. Now there is the non-compliance of section 211, so it is similar to 209, what we were discussing in 209. Let's move forward quickly. Now this is about subsidiary companies, 212. You know the concept of subsidiary and holding companies?
Yeah.
Okay. Now holding, what do you mean by a subsidiary? When I say subsidiary company, what does it mean?
The shares are held by a parent company.
How much? How many shares?
50% and more.
Supposing one share?
More than 50%.
More than 50%. More than half of the shares, if they are held by, say, X company holds 51% capital of Y company, then Y becomes the subsidiary. And if Z, supposing Y holds in Z, then Z also becomes a subsidiary of X company. So it is a chain subsidiary. So subsidiary of a subsidiary is also a subsidiary of the main company. So holding company, what do we call it? And then second is through the control of the majority of the board of directors. So if X company has got the power to appoint majority of the directors in Y company, then even if I am not holding any share, then Y company becomes the subsidiary of. Now then particular, all balance sheets of all subsidiaries are to be attached along with the main balance sheet holding company. So in this balance sheet you will find the subsidiaries balance sheets also. There is an exemption, again you can get an exemption. Now this is commonly used exemption nowadays. In fact, I received an application from a large MNC which is dealing in power generation. They have got 41 subsidiaries all over the world. And every subsidiary company is regulated by a different, is in a different country, obviously different laws apply, different accounting standards, different financial period. So they were not in a position to attach the balance sheets of all subsidiaries along with this subsidiary, the holding company balance sheet. So we went to the government and obtained exemption for all 41 subsidiaries. So that is also important. Then authentication. Now this is important. As an independent director, this authentication must be done not less than, the word uses not less than 2 directors. All directors can also sign, but minimum 2 directors have to sign, including the managing director if there is one. It has to be signed by the secretary. So when I say secretary, means the whole-time company secretary who is there, who is required in the company. And they have to be approved by the board of directors before they are signed. So this is authentication. Why I am saying so? Because if any balance sheet which is not authenticated properly is circulated, then again there is a penalty. So one has to really make sure. Now let us talk about come to the core of this subject now, finance for non-finance. Now this is very important. Now the word which is used in the Companies Act and general word which is used is financial statements. We talk about financial statements. What does financial statements include? Financial statements include balance sheet, profit and loss account, cash flow statement. These are the 3 things. The company's bill 2008 which has come, it has included one more thing to it, notes to accounts. They say now even notes to accounts are a part of financial statements. Obviously they are part, that is there. Okay. What do financial statements represent? Now if I ask you a question, very simple question. Those who are non-finance people, sir, can be, okay. Sir, if I may ask you, what does balance sheet represent as a layman? Have you seen balance sheet any time?
The assets and liabilities.
Assets and liabilities, very good. Okay, how do you define assets? In a common language, I mean, don't go into the technical things. Can anybody define assets?
Something that you
possess, which you possess, own, okay.
Which has some value.
If I talk in technical terms, it is a resource controlled by me.
Yeah.
Yes. Can I term it as a resource controlled by me, like maybe a plant and machinery? What are the other examples of the assets? Can you give me?
Goodwill.
Land and building.
Land and building, okay. Good.
Plant machinery.
Plant machinery is there, yes sir.
Cash.
Cash, yes, cash is an asset, correct.
Work in progress.
Debtors, work in progress, very good. Stock ho gaya basically. What you are talking is inventory. Inventory is also an asset. Goodwill, he is saying goodwill, yes. Everyone was talking of tangible asset, he is talking about intangible asset. He is right, yes.
Staff is there.
Staff, oh, fantastic.
Human asset.
Can you quantify it? That is the problem. You see, unless in balance sheets and in the profit loss account, whatever we can quantify is mentioned, otherwise it is not mentioned. So HR, we cannot quantify it. Though there is human resource accounting is also there, but we have not adopted in India. Therefore, there are assets, no doubt, but for the financial purposes, finance purposes, they are not. Okay, that's very good. When everyone knows what are the assets, why do you need this session now, finance for non-finance?
Because we are being directors.
No, that's fine, but everyone knows what are the assets. So I thought you will stop it somewhere, but you have listed everything. Anyway, okay, balance sheet indicates the financial position of the company. Now friends, I'll tell you, balance sheet represents the position as on a particular day, particular date, fixed date. The date changes, the financial position may change. So therefore, it is on a particular date. So when I say 31st March 2009, it will reflect a position as on that date itself. When I say 1/4, there will be a separate balance sheet for 1/4. Okay. Profit and loss account indicates the performance of the company. Okay. Have you seen profit and loss account also? Okay. What does it contain?
Sales and realization.
Sales and income and revenue on one side, and expenses, losses on the other side. Okay. So it indicates the performance, how I performed during the year.
Right.
So it's very simple. So in profit and loss account, if you have to see the performance, you know where you have to go to look at the profit and loss account. P for performance, P for profit and loss account. That's simple. But F for financial position and B for balance sheet, they are different. Okay.
Sorry for ignorance, but
Yeah.
how do you differentiate? I mean, what is the difference between financial position and performance?
Fantastic. That is also a financial position. Performance is also a financial position. Okay, when I say financial position, I am talking about how much I am worth. Net worth of the company. Supposing I ask you a question, what is your financial position? I am not talking about your performance. I am talking about your financial position. कि आपके बैंक बैलेंस में पैसा कितना है? आपके पास assets कौन से हैं? What are your liabilities? What are your loans? What is your financial position? Debits and credits. As how much you have got. What is your net worth? That is actually financial position. Performance is something different. Performance is how you are performing. Whether you are good at your work, whether you are bad at your work, I am not asking that. I am saying what is your present status of financial position today. That is the basic difference. Of course, they are in financial figures are there. Even performance contains the financial figures. Okay, inflow and outflow of cash will be given by the cash flow statement. कि रुपया कहाँ से आया और वो रुपया कहाँ गया. That will be indicated by the cash flow statement. That indicates the inflow and outflow of the. Okay, let's talk about the.
So this cash flow statement, sorry, again, cash flow statement, this inflow and outflow is maintained for each and every inflow outflow. This has to be done?
No, it is prepared over a period of time. Then inflows are, you see, grouped into separate heads. Like purchase of capital asset, that will be one head. If you want to go, then you will have to go deeper. But it will indicate कि ये पैसा आया कहाँ गया. जैसे budget में होता है. From where the rupee comes, normally you see the pie chart. From where the rupee comes, where the rupee goes. So it gives you in the broader terms. Like I have purchased plant and machinery for this purpose, for this much. Land and building, this much. I have paid to my creditors this much. From debtors, I received this much. So these kind of things. Okay. So it gives you an overall view. That where you have financed your operations, this is very important to you. Why it is important, I'll tell you.
What are intangible assets?
Intangible.
Over the question.
Now intangibles are there, which you cannot see. A tangible, does not have a tangible form, it is an intangible form. Intangible, he has given one example of goodwill. Can you give us any other example?
Human resources.
Brand, yes. Patents.
Human resources.
Trademarks,
Copyrights.
human resources,
Copyrights.
copyrights. So these are very good examples, even software.
Software.
Intellectual property. Software, intellectual property as a whole, which covers even trademarks, patents, copyright, and everything is covered. So intellectual property rights are the intangible assets of the company. Even software is also an intangible asset. Now the question is how it is quantified. Now our accounting standards say that internally generated intangible assets have no value. Zero value. You cannot put anything in the balance sheet. Internally generated, supposing I create a software for myself, the company creates a software for itself, sorry, zero value. You may have spent expenses, debit in the profit and loss account, charge it into revenue, you cannot capitalize it. You may be reaping benefit of that, but if you purchase from outside, then it has a value. So self-generated assets have no value, but otherwise they have values. and the purchase price or the acquisition cost becomes the value. Purchase price or acquisition cost. Yes.
Sir, as a layman, if I wanted to read this cash flow statement,
Yeah.
I've opened it here.
Yeah. Okay. What are the heads? I think if you can read
That's
out.
what
Yeah,
I
please, please. Go ahead.
Cash flow from operating activities.
Correct. Operating activities, please. From the operations. Let's supposing I'm into a manufacturing. So operation means what I've done into the manufacturing and sales and purchase. So this is the cash which is integrated. Yes. My sale. Correct. What does it say?
Cash flow from investing activities.
Cash flow from
Investing
investing
That
activities.
is my outflow.
Yeah, that is your outflow. No, that is not outflow. This is cash
What
flow.
money you have invested?
Okay.
This is also inflow minus the outflow. This is cash flow. Net cash flow is same. Net cash flow. It's saying purchase of fixed assets. Now this is purchase of fixed asset is not operation. You are buying because you are going to reap benefit not over a period of time. You are going to reap benefit over a number of years. So it is an investment for me. So it is from investing activity. So this is net. Okay. Now we'll go forward. Now these are the qualitative features of the any balance sheet when we prepare. We always talk about these things. These are very, very important things. They should be understandable. They should be reliable, comparable, truth and fairness, and disclosures. Okay. Now users of financial, I think this we can skip. Everyone knows this. Okay. Now there are certain assumptions. When we as auditors or as accountants, when we prepare the balance sheet, what are the underlying assumptions? Because accounting, okay, let me ask you a very simple question. How many of you are from science background or commerce? Science background first, yes. 1, 2, 3, 4, 5, 6, 7, 8. Oh, 8. Okay. So maximum are from the commerce background, 8 are from the science background. Okay. My question is directed to these science guys, the technical guys. Is accounting an art or a science?
Science.
It's a science? Okay. Why do you say it is science?
Because there is a certain logic behind it.
Mathematical
modeling.
Oh,
So
mathematical.
It's an art.
It is an art? Okay. Why do you say that it is an art?
Can be drawn in any way.
Sorry, I'm taking you to a very basic question.
I understand.
Because
Taking you to a very basic question.
There's a debate which I have also had, that's why I'm sharing this.
You already had a debate. Okay, then I think let's have the wisdom of that debate. Yeah.
The only thing is, what I felt is that something, an accounting entity can be made to appear in different forms depending upon the situation.
Okay.
So this is why I thought that it can be taken as an art and not, it's not really defined that okay, I have to project it only in this particular manner. I can project it in any form. Like somebody said 2 plus 2 can be 5. Something like that.
In the art
In
part
fact,
is
if
that
to take an example
whether it
from
is
you, so
asset or
one
expense.
chartered accountant was being interviewed. So, I mean, for the post of an accountant, so obviously a chartered accountant was also there. First, an engineer was, interviewed and he was asked a question, not for the post of accountant, just generally. So he was asked, he says, what is 2 plus 2? So he took out his, measurement scale. He says, it is something between 3.999 and 4.00001. It is something between that. So then a lawyer went inside and he was asked the same question. He said, what is 2 plus 2? He thought for 5 minutes. He said, Supreme Court in so and so judgment has said 2 plus 2 is 4, so therefore it is 4. When the chartered accountant was being interviewed, he was asked, he says, what is 2 plus 2? He put the window shades up and all that. He says, tell me sir, what do you want it to be? आपको कितना चाहिए बताइए. So that is why he says it is an art.
absolutely.
It is
But
an art.
as long as there are standards to be followed, it's based on certain specifications, so I believe it is
Okay, any other view before I deal with this particular thing? See, I'll tell you, it is both an art and science, number one. Why I'm saying so, you mentioned about accounting standards. But accounting standards, if you read accounting standard, it does not say 1 plus 1 is 2. It says if this situation is there, then you have options either this or this. Accounting standards are giving you options to do accounting in this manner or this manner. Always like you have to provide for depreciation. Depreciation is a charge over the assets. It can be a WDV, written down value. It can be straight line method. So option is given. So what you have to do is, accounting standard says, whatever method you are adopting, please disclose. So therefore, I cannot compare Hindustan Petroleum with Indian Oil, because Indian Oil may be following SLM, this company may be following WD. So therefore, it becomes an art. And I would say it is a science, because 1 plus 1 is always be true. Balance sheet and assets and liabilities will always be
Cause
equal.
and effect
So to
relation.
that extent,
It has cause and effect relationship.
cause and effect.
Also,
correct.
double entry
So
system.
to that effect,
Whatever is
it is
debited,
science.
it is to be credited. So it is a cause and effect relationship. It is a science.
To that extent, it is science. But there is a subjective view.
Subjective. Right?
The view which we have to take under the accounting standard is always subjective. It is not based on any objective
Right.
judgment.
It is
Judgment
just
is
like a
subjective.
guidance note
Correct.
or
It's a kind of
parameters.
guidance.
Parameters.
Substantive guidelines to reach an objective.
Absolutely, absolutely. You have got it now. Absolutely. They are subjective guidelines to arrive at an objective evidence. Absolutely. Absolutely.
That is why they put in the commerce.
That is why it is good in class. So therefore, it is 80% art. So I will go to that extent. It is 20% science and 80% art.
Presentation, because of presentation, it is a art.
But as a chartered accountant, I am also chartered. He is also chartered accountant. So we'll say it is both. We will always travel in two boats. Accountants always travel in two boats.
I remember there was a debate on a particular issue like this. And there was, in a very big company, there was a transfer line which is being used.
Okay.
Now, a transfer line happens to be a series of machines which are connected to it.
Okay.
And then there was this very significant amount of money which was spent on a particular unit. So now the question was, how do you account for this? Is it a capital expenditure or is it a revenue expenditure? The company decided to show it as a revenue expenditure. Okay, because it was giving us certain advantages. But then there was an objection which was being raised, and no, it should be shown as a capital. And that's how I remember because there can be different interpretations to the whole thing.
There are always interpretations involved, and there can be a subjective judgment. Enron scam actually happened because of this. Enron scam, which we call, it was actually an auditing scam. It was not a corporate governance failure, it was an auditing and accounting failure. Why I am saying so? Because the revenue expenditure, the expenses were treated as assets. They kept on capitalizing year after year. So ultimately at the end of 5 years, there was 6,000 crores of fake assets, which did not have corresponding value. So the company had to crumble. Same thing happened with this something also.
What kind of
Fake
expenses were
sales,
capitalized?
fake sales being shown, fake profits, fake cash balance, nothing to match. In physical sense, there's nothing. This is again, to this extent, it is an accounting.
Heavy cash balances which were reflected in the books of accounts were not in physical forms.
That is a corporate governance failure. There the governance failure is there. Independent directors or even the bankers. See, look at bankers were receiving the balance sheets.
Balance sheets.
So they should have questioned that you have got 500 crores of fixed deposits, but you don't have anything with me. Which banks you are putting 500 crores and why do you need loans then? They never questioned.
This was quite
Auditors never questioned.
Yes.
Auditors did not follow the practice. They should have written directly to the bankers and obtained the confirmation directly. They lagged on this. They relied only on the certificates. You see what Raju probably would have done, I don't know. It has come to our knowledge that what he has done is he has forged the certificates of the banks also. Original certificate, letterhead तो IT company है कुछ भी बना लिया letterhead. अब auditor को तो original मिल गया ना वो कहता है यार ये तो original है. How does he make a difference between the?
There was, sir, in
But
fact,
only-
there was some type of collusion between. He had taken him to full confidence.
It cannot be done otherwise. It cannot be done.
We are also doing audits, sir. We can't rely
So
actually.
auditor was being compensated fully.
Sir, छोटे से छोटा certificate भी है तो we go
Correct.
ourselves we go to banks.
And we are very careful while issuing even a smaller certificate also,
Certificates
because
are
it is the our reputation is at
Implication,
stake as
sir.
auditors.
Our-
So unless and until auditor is involved, this kind of a scam can never happen. Can never happen. Okay. Now we were talking about the underlying assumptions. Underlying assumption is that accrual basis. As I mentioned, they are prepared on accrual basis. And then this is important. Now another underlying assumption is that they are prepared on a going concern basis. That I am going to continue. I am not going to wind up the business in 2 years. It's a going concern assumption which is there. Consistency. That the figures from 1 year to another year should be on consistent basis, consistent accounting policies, consistent accounting standards. I should not change the method of depreciation from year to year. And if I change, I must give a note, qualify and also quantify what is it? I'll just take you to the basics before I deal with your balance sheet and other things. For non-finance people, it is not for the finance people. Non-finance people, I'll take you to the basics of the accountings. That unless and until you understand this, you will not be able to understand the accounts and the finance. There are 3 types of accounts. Am I right, sir?
That's it.
Now there are real accounts, personal accounts, and nominal accounts. Personal accounts, you understand. If a person is dealing with a company, his account is opened in the books of account, it is a personal account in the name of that person. Real accounts are basically kind of assets. The real accounts means the assets and the liabilities accounts, major liabilities account. Nominal accounts are those the expense accounts, right? So these are the 3 types of accounts, and there are certain rules which are attached to it. How the accounting is done.
Revenue accounts?
Revenue accounts are nominal accounts.
Nominal.
Nominal. Expense and revenue और income है वो इसमें आ जाएगा. Okay. Now let us look at the accounting rules. Real accounts. Now, I think you know there is there is debit and there is a credit also, and debit and credit are always equal. This is a double entry. One account has to be debited, other account has to be credited, so that the accounts is always balanced, right? Supposing I am taking out 50,000 cash from the bank account. Now there is a debit of one side and there is a credit on one side. So what is to be credited? What is to be debited? Bank is debit. The cash is debited and the bank is credited. Am I right, sir?
Yes.
Okay. The asset is going. So real accounts. In real accounts, this is the rule: debit what comes in. These are most important rules. And I'll tell you, when I was in 11th and 12th standard, our lecturer used to tell us that please write all these rules on the top of each page. और वहाँ लिखते लिखते आज ये आदत हो गया कि बिल्कुल याद हो गया. Okay, credit what goes out. So cash is coming in, so cash is debited.
Coming into where? Coming into the account?
Books are coming. See, the nature changes, na? Like withdrawn from bank, it is in the form of cash. So cash account is alag, bank account is different.
So in the cash, if it is withdrawn, so it's going out, so it's a credit there.
It goes out, no, from bank will be credited, na?
Yeah, so bank
Will be credited, cash will be debited.
cash.
So cash increased, bank balance decreased. So debit what comes in, credit what goes out.
Okay, so 2 entries means one in the bank, one in the cash.
Correct.
It's 2 entries.
Yeah, that is a double entry.
Double entry.
Yeah.
Like supposing you purchased, say, plant and machinery out of your funds. So plant and machinery debited, credited, cash or bank. Either you paid hard cash or you paid through checks. So this is what. Okay, personal accounts. Like supposing you pay an advance to somebody, personal accounts, or debtors or creditors you are paying. Debit the receiver, credit the giver. So recipient is always debited, and the person who is giving, supposing the company receives cash from XYZ company. Now what will be the entry you do now? Just a basic.
Sorry?
50,000 cash received from a supplier, and supplier's name is say XYZ. What will be the entry in the books of the company?
XYZ will be credited.
Obviously, he is the giver. What will be debited?
Cash.
Debit what comes in. So it is not the debit rule may come from the other account and the credit rule may come from the other account. So here the entry will be, is it easier or difficult?
So debit is the cash.
Debit is cash. What comes in, what I have received today is cash. So the cash is debited. What is credited? Who has paid me?
Supplier.
XYZ. So XYZ is credited.
Cash is in the form of real accounts, and
Yeah, cash is real account. It's an asset.
that rule will apply. First rule will apply, and in the second rule will apply.
Right?
This I don't understand. Why first rule? Here also debit is the receiver is the cash. So
No, the
debit-
receiver is not the cash because the cash is not a personal account. Cash is not a personal, cash is a real account. So first you have to categorize what type of account it is. Cash is a real account. Personal account is in the name of a person. Name should be attached to it. Like debtors, creditors, loan givers, loan takers, they are personal accounts. But real accounts are the assets, the real assets of the company. Okay.
In our case, we will debit it.
Yeah.
We will credit.
Pardon?
The supplier will credit it.
In his books. In his books, he will debit me because I am the receiver for him, and he will credit his cash because it is going out. In his books, it will be my company debited, cash credited, but in my books it will be reverse, cash received debited, received from XYZ, XYZ credited.
But expenses and losses both are same thing. There is no difference.
Expenses oblique stroke losses, like supposing loss on sale of plant, so that will be debited. Supposing I have sold I have got in my books 20,000 worth of plant.
Then I understood.
Okay. And credit all incomes and gains.
What does this mean in all this?
What is
I
this?
just got a message today morning.
There is a credit balance. Now look. Okay. Sorry.
I got actually.
Let's just read it. I'll explain.
There is a credit balance of rupees minus 108.69 in your card.
Yeah.
Credit card.
In your credit card. So it is a credit balance. You have to pay him, na?
Minus 1.
Minus है, that means ज़्यादा भरा है.
There is a
ज़्यादा भरा
credit.
है.
हाँ, ये minus में तो debit हो गया ना तो फिर. Two negatives will make a positive.
Okay.
So it becomes a debit balance.
Even in that statement they write CR.
CR means credit.
Yeah. Means वो मेरे से ज़्यादा जमा हो गया है.
No, no.
नहीं.
It means you had a nice time. You spent a lot of money.
No. मेरे से ज़्यादा जमा हो गया. ज़्यादा जमा. He is right.
Credit card account है.
हाँ. मेरे से ज़्यादा जमा हो गया.
And if they are showing as a credit, then they have to pay you.
Yeah.
So that means you have deposited more.
There is a
Yeah. But they write that like that. CR.
हाँ ठीक है वो credit ही
ठीक है, वो
होगा.
credit debit
Credit
लिखते
is
हैं.
CR and
Short form of
debit is
credit.
DR.
CR. These are the basic accounting rules which you have to understand. You don't have to do accounting. I'm just telling you for the sake of it because tomorrow you can catch hold of the things which are going wrong. That's it. Okay, accounting is an expert job, so let the experts do it. Only we are knowing it to catch the things. That's all. Okay, let us understand the balance sheet. There are two types of formats which are there. One is a horizontal format. That means liabilities are shown on the left hand side and assets are shown on the right hand side. But this is the format which is normally not used in companies. Normally not used. This is a very simple format which is not being used. आजकल कोई भी यूज नहीं कर रहा आजकल तो ये very few organizations, maybe small proprietorships may be using it.
छोटी सी बैलेंस शीट
जिनकी पहले से ऐसी बन रही है वो चेंज नहीं करना चाहते. Small partnerships and proprietorships. Okay. And then there is a vertical format which is there. And then there we can see the sources of funds at the top and then application of funds at the bottom. So there is a two columnar. Sources of funds, then they are totaled. Application of funds, they are total. So sources are equal to the applications. So again, left hand side is equal to right hand side. The top portion is equal to the bottom portion. So that is the mantra in balance sheets. Debit is always equal to, for every debit there is an equivalent credit, maybe in two accounts. Okay. Then we go forward, liabilities. Now you have already identified, now this is a statement. Liabilities are nothing but my obligation, which are arising out of the past events, right? I have taken the services of, say, a carpenter. I have to pay him, so it is a result of the past event. I have taken his services, now I have to pay him, so it's a present obligation. Today, I have to pay it because of this thing, which is settled by way of outflow of resources. And their assets is nothing but the resource controlled by an enterprise, from which some benefit is expected in future. Economic benefit. When we say economic benefit means in terms of money, which is there. Okay, now let's move forward. Now liabilities will certainly look like, in a balance sheet, the liabilities will look like this. This is the scheme of the things in which the liabilities are there. So on the top there is a share capital. Why is share capital a liability for the company? Who has paid this?
Shareholders.
So it's a liability for, because company is a separate legal entity. Now here comes the, you see, what I talked about in the first instance, here comes the practical view. Treat the company as a separate entity than the shareholders. Even the shareholders are different from the company. Shareholders have paid money to the company, so it is a company's liability to pay them back whenever the company is wound up, so that the payment will be made to the shareholder, not before. So shareholders are not entitled to get any payment except dividend, except on the winding up of the company. throughout the year they can get the dividend but not the capital. Capital will not never be refunded unless the company buys back its shares in accordance with section 77A and 77B. Okay. Then comes the reserves and surplus. Why it is a liability? Reserves and surplus is nothing but the current profit and also the accumulated profit in the past. Because this is nothing but it belongs to the shareholders, it does not belong to the company. See, on the share capital, the company has earned this profit, which is also a shareholder fund. So therefore it is a liability for the company.
Out of the profit, some reserve
It is unappropriated portion of the profit.
Appropriate portion.
So when they issue bonus, they debit the reserves and
Correct.
surplus and credit the share capital.
Correct. Absolutely.
बुक के अंदर ही.
Yes. बुक के अंदर यही करते हैं, वो convert कर देते हैं.
फिर तो बाद में you don't have to
Debit-
pay back the reserves.
Debit reserves, credit share capital.
No, but if the profit is used in the company again, then
See, that is a question is that profit is there. Supposing you have earned say 20 crore of profit. Now, if you want to declare dividend, after all appropriations, आपने सब expenses निकाल दिए, उसमें tax provisions निकाल दिए, all provisions for the expenses, the net profit which is available for appropriation is say 20 crores. If you have to pay dividend, there are certain guidelines that you have to transfer certain portion out of it to reserves account, general reserve account. So you will transfer say 10%, and you declare 10% as the dividend. Balance is available for the company to use. But if the company feels no, we want to retain the entire profit for the future purposes, they will not declare dividend. So it gets accumulated. So the company's net worth keeps on growing. That adds up to the share value. I'll show you. When we talk about the ratios, then we'll talk about it.
So if
And
a
loans.
company has a P&L on 31st of March,
Correct.
let's say 10 crores of net profit after everything,
Right.
and say they also declare 2 crores as dividend.
Okay.
Does the balance 8 crores
Goes to
go
the
to reserve on the balance sheet
Goes to the reserves.
on that same day?
Goes to the reserves. If you don't declare anything, 10 crores straight away goes to
Everything
the
goes to
reserve.
the-
Yeah.
एक एंट्री और डालते हैं सर फ्रॉम प्रॉफिट एंड लॉस अकाउंट कैरिड फॉरवर्ड फ्रॉम प्रॉफिट एंड लॉस अकाउंट
That's basically for transferring to reserves. Carried forward. See, there can be a specific general reserve, or there can be an accumulated profit and loss account. Profit. So this is basically carried to balance sheet, is not transferred to any specific reserve, but it is carried as a profit only.
which
It is
can be
carried as
used
a
up.
profit, which can be used up. Because when you transfer to general reserve can also be used up for any purposes, except for there are other reserves like share premium reserve, which can be used only for specific
Asset
purposes.
making.
Which can be investment allowance reserve, which was earlier there, so it can be used only for specific purposes. So that is the reason. So loans are always a liability. There can be secured loans, there can be unsecured loans, then there are current liabilities. What do you include in current liabilities? Can you give examples of any current liabilities? Suppliers. Payments to suppliers, creditors.
Creditors.
So these are the statutory liabilities, maybe income tax liability, whatever this, so that will be shown. Outstanding expenses, correct, provision for expenses.
Advances given to
Advances given to, no, that will come in assets.
वो assets में जाए.
ये होगा advances received. Supposing against orders I have received advances, that is a liability.
Then liability.
When it is liability, because I have to refund, either I have to refund or I have to supply
Give the
material
material.
against them.
all short-term obligations like.
Correct? Shall we move forward, sir?
Yes, sir.
Okay, let's look at the asset side, what it looks like. आपने बता तो सारे दिए, अब उसकी placement आपको बता देता हूँ कि कैसे होगी. And why I'm telling you, because it is a sequence. इसी sequence में ही assets आपको vertical format में नजर आएंगे. Like on the top there will be fixed assets, then intangible assets, then investments, then current assets. Current assets are these: inventory, cash and bank balance, sundry debtors, loans and advances given, not taken. And last one is miscellaneous expenditure.
Who
Miscellaneous.
evaluates intangible assets?
Pardon?
Who evaluates intangible assets?
Who evaluates? I told you, as far as intangible assets are concerned, it is basically debited, treated in the books of accounts at the cost of acquisition. That's all.
लेकिन गुडविल अगर है तो फिर
Goodwill भी तो बैलेंस अकाउंट होता है ना. जैसे supposing I am purchasing, say a particular, I am merging, I am taking over certain organization, and I paid say 20 crores for that organization. Correct? Out of the 20 crores, I'll see how much assets I have acquired. Say I have acquired only 10 crore worth of assets, and liabilities worth 2 crores. So net is 8 crore. Balance 12 crores is goodwill because I paid for goodwill.
Supposing you have not acquired, you want to sell now. So how do you?
That will come as a profit.
No, suppose you want to now value goodwill. But you have not acquired any company. You yourself are wanting to sell.
No, that cannot be put in the balance sheet.
So you will not have
There is
any
a self-acquired goodwill cannot be created in the book because that is a fake asset. The simple reason, otherwise हर company अपना बड़ी से बड़ी company अपना 20,000 करोड़ दिखाना शुरू कर देंगे.
brand value कैसे होगा?
In case we buy some
Brand
brand,
value, if you buy a brand, cost of acquisition लगा दो, अपना brand नहीं value कर सकते. That is the difference. Because why I am saying so, in accounts we proceed on a conservative basis. We proceed on a conservative basis. We will never account for the income, but we will account for all expenses. That's a conservative basis.
sir, in this inventory, particularly raw materials, suppose I bought some item for rupees 100 and today after some span of time its value has come down to 20 rupees
So that has to
only.
be treated as now. This is, I said conservative. If it values goes up, I will not account for the higher value. But if it comes down, I will say inventory is valued at cost or market price, whichever is lower. That is the accounting standard. Inventory का है, AS2 है. Inventory का that talks about that. और इसमें हमें mention भी किया होगा. In the balance sheet, it will mention how the inventories or accounting policies which are there.
Sir, suppose you have acquired a brand
Yeah.
and is it necessary you have to pay by cash if you have acquired and then you have debited say share capital because they have issued shares against that.
You can do that. You can do that also. See, accounting
But then you have to
accounting में ये
acquire.
benefit है. See, you can do any accounting entry. Supposing you have acquired a brand, brand is debited because it is my asset. Debit what comes in as brand is coming. What goes out? Share capital or cash.
Why
In
is,
cash or in kind.
why is miscellaneous expenditure on the balance sheet? Expense should be on P&L, no?
It is not expense. It is expenditure.
What is some
Difference
example?
between expense and expenditure. Expense is a routine expense. Day-to-day expense. Expenditure is something which I have spent for which I am reaping benefit over a period of time. Fortunately or unfortunately, now this actually term will go away because our Institute of Chartered Accountants have said that there will not be any deferred revenue expenditure. It's a kind of a deferred revenue expenditure. Supposing,
Some example?
I'll give you an example. Supposing earlier we used to capitalize this by saying that I'm coming out with a public issue. And while coming out with a public issue of say 10,000 or 1,000 crore, I need to spend something around say 50 crores, giving to the brokers, so and so forth. And the benefit is being reaped over a period of years, number of years. It's not being reaped in 1 year itself. So our institute's accounting guidelines said you can treat it as a deferred revenue expenditure to be written off over a period of 5 years, 6 years, whatever you want it. Even the Income Tax Act also permits. Over a period of 5 years you can write it off. But now institute has withdrawn that guidance note. Now there cannot be any head like miscellaneous expenditure. जो पहले के चल रहे हैं वो as it is write off करते रहेंगे in installments, but नया asset miscellaneous expenditure में नहीं create होगा.
So now it will all be an expense of that.
Correct. It will be expense of that. So now we are coming to more conservative कि जो खर्चा है उसको write off कर दो. ये fake assets बनाने का जरिया था, तरीका था जो उन्होंने खत्म कर दिया. That is it. Right? Okay. Now I'll tell you a very interesting story. There were two chartered accountants, husband and wife. They were both chartered accountants. They were asked a very pertinent question. The husband was asked a question that in the balance sheet of life, where you will place your wife. So husband being a chartered accountant, he said, he thought about for 2 minutes. He said before marriage, she was a contingent liability. But after marriage, she became a current liability. But after 5 years of marriage, now she is a secured liability. So I will treat it as a secured loan. So this question was again asked to wife who was also a chartered accountant. He says in balance sheet of life, where you will place your husband. See, without thinking for even for a single moment, she said, I will place my husband on the asset side. He is an asset for me. So husband was very happy. He said, at least I am, you see, asset for my wife. So then she was asked, where you will place your husband? She said, undoubtedly miscellaneous expenditure to the extent not written off or adjusted. So this happens sometimes. Okay.
Intangible assets, you said the software is also
Correct.
if we acquire from outside. What about the training, the cost which we pay for training of this?
Training cost is also to be charged to revenue expenditure nowadays. It cannot be capitalized. They say now training is a routine cost. Sorry, it cannot be treated as a recurring kind of a benefit which is here. You may reap the benefit, but they say there is no guarantee. Supposing tomorrow the employee leaves you, then what happens? How do we account for it? So therefore, it is to be charged to revenue account. That means it is charged to expense account in the year in which it is incurred. So it will not be treated as an asset. These are the modus operandi for creating fake assets. Supposing I don't render any training, but still I capitalize. I take fake bids and to start capitalizing. So my balance sheet will be strong. I'll go to the banks and get the loans. I'll loot public. So therefore, now we are trying to curtail these kind of tactics now by the promoters. Unscrupulous promoters. Yes, sir. No, let the house decide. Let the house decide. Shall we break for tea now?
Right, sir.
And there is